Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. We begin in the United States with the latest on the budget deficit there, which is up 10%. The U.S. Treasury Department says the deficit climbed to $244 billion in July from $221 billion in the same month last year. They attribute the nominal increase to lower than usual benefit outlays. Looking at the bigger picture, however, for the first 10 months of the fiscal year, the deficit actually decreased by 6% to $1.5 trillion. The government's fiscal year ends on September 30th. Global oil prices rise for a fifth consecutive session on expectations of a widening conflict in the Middle East that could tighten global oil supplies. Oil prices jumped by more than 3%, with the global benchmark Brent crude futures settling higher at more than $82 a barrel. Brent saw its biggest percentage gain for a single trading session this year. This comes as Iran and the Lebanese militant group Hezbollah vow to retaliate for the assassination of their leaders. Oil giant Petron Corporation plans to raise up to 17 billion pesos from the sale of Series 4 preferred shares. In a disclosure to the Philippine Stock Exchange, Petron says they will sell a total of 17 million shares at 1,000 pesos each to refinance their maturing obligations and for general corporate purposes, including the purchase of crude oil. The offer period will run from August 19th to the 26th, while the shares will be listed on the PSEI on the week of September 2nd. President Bongbong Marcos is eyeing a nuclear energy deal with a United Arab Emirates power firm to shore up the Philippines' energy sector. In their meeting in Malacanang, the president told the chairman and CEO of the Emirates Nuclear Energy Corporation that Manila is open to using nuclear energy for power generation. He adds that this is one of his administration's top priorities. Shares of Indian multinational conglomerate, the Adani Group, fall amid allegations of conflicts of interest between them and the chairman of India's capital markets regulator. The share price of the Adani Group of companies lost roughly $2.4 billion in market value on Monday. That's after U.S. short seller Hidenburg claimed the chair of the Securities and Exchange Board of India, as well as her husband, previously held investments in offshore funds also used by the Adani Group. Hidenburg earlier accused Adani of stock manipulation and corporate fraud. Adani, however, is denying all of these allegations, calling Hidenburg's latest report a red herring. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Checking now on the financial markets. U.S. stocks closed mixed as investors await the release of July inflation figures this Wednesday. The Consumer Price Index, or CPI, is expected to increase month on month to just 0.2%. Also in focus this week, retail sales data that's due out on Thursday. This is also expected to garner some attention after the latest jobs report revived fears of slowing growth. Over in Europe, trading at the benchmark stock 600 was subdued. That's as investors brace for key U.S. inflation figures amid lingering fears over a recession amid a deluge of other regional data points. Let's take a look at the local bourse right now. Shares at the Philippine Stock Exchange, not much movement over here. The PSEI index is up by 0.1% to 6623. All shares index up by about 0.2% to 3604. Financials and property sectors are in the red, while the industrial holding firms, services, and mining and oil sectors are marginally in the green. Now, to help us make sense of these numbers, we're joined on the line. We're joined via Zoom by the president of Eagle Equities, Joey Rojas. Good morning, Joey, and thank you for being with us this morning.
Good morning, Mike.
Okay, Joey, investors are sidelined, investors are cautious. As early as May, BSP Governor Eli Remolona said that he hinted of rate cuts, possibly beginning this month, this August. So the market's been pricing it in. But last week, we received mixed economic data. Unemployment and GDP figures surprised to the upside, while inflation, July inflation, crept up to 4.4%. You know, some economists are saying that the BSP could do a 180 on interest rates. What do you think?
Well, inflation is still up. It may be slowing down a bit. It's still up. So I actually agree with the position of the BSP now. Rock and hard place. Mm. On one hand, businesses are crying for lower interest rates. On the other hand, if you lower interest rates before the US does, you might see a spike in the exchange rate, which will again fuel inflation to higher levels. So it's a difficult position. My own thinking is that they should not lower yet until the US lowers its own rate.
Okay, yeah, it's a tough position for the BSP. It's a very delicate balancing act. There are pros and cons to each side. Another really big thing rattling the markets, as we saw last week, is over in Japan, a top concern, the unwinding of the yen carry trade position. This after the Bank of Japan, after years of keeping interest rates low, decided to increase their interest rates. This rattled investors. Can you walk us through what happened over there and how that is affecting us and the global, global financial markets?
Well, to keep it simple, it was so easy and so cheap to borrow in yen. The aggressive fund managers would borrow in yen and then invest it elsewhere, where simple interest rate paying or dividend paying stock would be enough to pay off the loan, the interest that they pay in Japan. But when Japan suddenly raised its rate, it really surprised everybody, so that now these types of trades become now unviable, and they have to be unwound. And I guess that's what.
Okay, Joey, who's going to benefit from this, from the unwinding of the carry trade? Who's going to benefit, and how do investors position themselves?
I don't think many will benefit because that type of carry trade helps increase buying power in other markets. Now that it is being reduced, there's a contraction of demand for instruments in other markets aside from Japan, as money goes back to Japan to avail naman of the higher rates there.
Now, going back to the Philippine Stock Exchange Index, we're at 6222. Sorry, we're at 6622 right now. We've been trading at a narrow range for the past 2 years between 6,000 to 7,000. What's it going to take? Anything on the horizon that could push us higher than the 7,000 ceiling that's been so hard to breach?
Well, definitely in the last 2 years, we've had a lot of problems really with inflation. The Russia-Ukraine war spiked oil prices, most grain prices, because Ukraine is a big exporter of grain, flour, and other types of grain or products like essential cooking oil and oils and that type of stuff. So, and that really affected the supply chain, and so everything went up. On the closer, let's say for example, this year we had our El Nino, which has affected the rice and sugar crop, and now we have to import more. We were already importing, but now we have to import more. And given that the exchange rate is so high, I don't think it's going to help inflation come down.
Yeah, so everybody's really just, all eyes on the BSP for what they're going to do, because that's going to have a big impact on the market. Joey, one last question. Historically, rate cuts are great for the market because everybody shifts away from, from defensive fixed income assets in favor of equities. Do you think that a cut of about 25 to 50 basis points, do you think that could help push us beyond 7,000?
For the local market, yes. For the economy, maybe not yet. I think the economy needs a bigger cut than that. I think that's too small. It's like when let's say when interest rates are high and you start cutting by 25. Sorry, when inflation is high and you have to raise rates, right? When you have to raise rates, you start slow, 25, then another 25, then another 25. The first one does not really have any effect. The effect will come much later when you raise it by about 1% already. So in the same way, when rates are coming down, the first 25, I don't think there will really be much effect. Maybe we'll see the effect on the economy starting next year already, not this year. The markets, though, might take that as a cue that there are better things to come, at least for the listed companies.
Well, we hope for all those.
That could start of the BSP start when they start lowering interest rates. That will not be the first one. It will be the first in hopefully many reductions to come. And I think that's what will drive the market to 7,000 by the end of the year.
All right, thank you for your thoughts on that, Joey Rojas, the president of Eagle Equities. As you said, we are all waiting for better days to come for the market. Thank you. Now we're taking a breather. Basis points. We'll be right back. Welcome back. Data on the global youth unemployed rate is out, and it's at a 15-year low. The International Labor Organization says the youth unemployment rate fell 13% in 2023. This translates to 64.9 million unemployed between the ages of 15 and 24. The ILO attributes the improvement in the labor market to robust economic growth rates after the COVID-19 pandemic spurred the demand for youth labor. But the United Nations agency notes that youth unemployment rates were higher last year than in 2019 in Arab states, East Asia, and in Southeast Asia. On to some earnings data. Utilities and infrastructure giant Metro Pacific Investment Corporation delivers a solid performance in the first half of the year. Its core net income rose 27% year on year to an all-time high of 12.5 billion pesos. MPIC Chairman, President and CEO Manny Pangilinan attributed the earnings growth to robust contributions across its core sectors and to benefits from tariff adjustments. Now, Enrique Razon's International Container Terminal Services reported a 34% surge in its first half earnings to a record $420 million. Razon says this is on account of their diversified international portfolio and their strategic initiatives. Now, after a subdued first quarter, San Miguel Corporation rebounds with a 66% jump in first half profit. SMC also registered consolidated revenues of 789 billion pesos, up from 15% from the previous year. Now, before we go, let's take a look at the business headlines in the major news websites. On Inquirer, Fitch trims its economic growth forecast for the Philippines for this year from 6.2 to 6%. On Business World, Meralco customers are to expect a slight increase in their electricity bills this month due to higher transmission charges. And on CNBC, a New York Fed Consumer Expectations Survey puts the three-year inflation outlook at 2.3%, its lowest level since 2013. The poll also shows household spending is expected to increase by nearly 5%. And that's it for Basis Points. I'm Maiki Oreta. Stay tuned tomorrow for news on the financial markets and more. Keep it here on BNC, the Bilyonaryo News Channel. Executive Insights is up next.